Hi everyone, I'm Roxanne Hayes, broker owner of RHM Loans, and welcome to my channel where I talk all things mortgage. So in today's video, I'm going to give you quick tips or tricks to help you increase your credit score quickly. Now here's a disclaimer. I am not a credit reporting agency. I am not a credit repair specialist. All I am is an individual who's been in the mortgage space for over 16 years. I've worked with many buyers who started off with bad credit, who then took my advice to help increase their credit score and are now able to be homeowners. So the first thing you need to do in order to increase your credit score is know what is reporting on your credit report. So you need to obtain a copy of your report at www.annualcreditreport.com. This is free that you can get once a year. Now, it does not provide you with your credit scores, but it's all the same information that's being reported through the credit bureaus. So the first thing you need to do is double check for any inaccuracies. If you are someone who is a junior or the third, or you have the exact name as someone in your family, you are going to want to review your credit report. There are many times, just because you have the same name as someone, their credit is now being reported on your credit report. Sometimes that helps you, but other times it can hurt you. So make sure you're checking for any inaccuracies. You also want to double check your social security number. You want to make sure that the numbers are correct. There are many times that numbers get transposed for other people that are applying for credit, which may be the exact number to your social. So their credit is being reported on your credit history. So you want to make sure that that information is accurate. And another thing you want to check for on that report are for any fraudulent accounts. If there's anything on your credit report that you're like, I have no idea what this is regarding, you really should do your due diligence and figure out where this came from and make sure, that does it belong there or doesn't it, and figure that part out. Another tip is to make sure you have 3 trade lines. So trade lines are the actual creditors that are reporting on your credit. So an auto loan, that's one trade line. A credit card is another trade line. A store card is another trade line. So those are trade lines. You want to have a minimum of 3 trade lines. So here's a pro tip. If you're someone who's like, no, I pay everything cash, I don't finance anything, and maybe you have like one credit card or you just have your auto loan. So if you can be an authorized user on a long and good standing account, you will be able to inherit that person's credit history for that account. So that means if mom and dad have a credit card that they've had for years and they add you as an authorized user, keep in mind they don't have to give you the card. You don't even have access to their account. You can then inherit all of that credit history that you get from that account. And just so you know, you cannot have all of your accounts to just be authorized user. The underwriter does want to see that you are able to maintain your own credit. Improving your FICO can take some time and consistent effort, but there are some actions that you potentially can see faster results. So here are the top 5 things to help you improve your FICO. Number 1, pay your bills on time. That's right, guys, you guessed it. The more that you're paying your bills on time, the more credit history that you're building, and this will help you increase your FICO score. Number 2, reduce your credit card balances. So a nice rule of thumb is when you have revolving accounts are credit cards. These are the accounts that go up and down based on how you use them. So for example, your car payment is an installment account because it's one monthly payment that you pay consistently through the time of having that debt. Where a credit card is revolving because it's really based on how much you use it. Your monthly payment ends up increasing because your balance is getting higher. The lower your balance, it's normally the lower the monthly payment. So the rule of thumb to reducing your credit card balances is 30 to 25% per trade line. So for example, if you have a $1,000 limit on your credit card, you want to make sure that you are not using more than $250 on that card. Number 3, address past due accounts. If you have accounts that are recently late and past due, you need to get them current as quickly as possible and maybe plead to the creditor if they could please delete the late reporting. Sometimes it works, sometimes it doesn't, but those late payments can drastically affect your FICO score. So please make sure you're making your payments on time. Now, when it comes to collections or closed accounts, I do not recommend paying those off until your creditor can agree to a deletion letter. Paid collections do not increase your FICO score, but collections that are removed will. So you can still negotiate that collection price, but if they agree to give you a deletion letter, then that is a win. That is a win for you. Number 4, limit the number of new credit applications. So a lot of the times when people are trying to, get those trade lines, they are applying to multiple places in order to get approved to be able to have multiple trade lines. Now, every time that you have someone look at your credit, you get what's called a hard inquiry. Now, those inquiries will temporarily lower your credit score. It does go back up after a certain time period, and they do get removed every 2 years. But you just don't want to go around applying for a bunch of different cards, because what it says to the bureaus is that you're getting declined and not so much that you're getting approved. And number 5, regularly check your credit report. So as I mentioned at the beginning of this video, you are able to obtain a free credit report with no scores at www.annualcreditreport.com. So I check my credit report annually. I like to do it probably like the beginning of the year, towards the end of the year, but I like to keep it at the same time. That way I can see if anything changes or doesn't change. So you don't have to spend lots of money to be able to monitor your credit. I even use Credit Karma. Now, their reporting is different than what mortgage creditors use in order to calculate their FICO model. So the scores are never the same, but as far as monitoring what's on your credit, I do like that because it does alert me if I do get a hard inquiry, and then I can acknowledge, oh yeah, that was me, or who's looking at my credit right now. So while some of these tips can help you improve your FICO very quickly, it's important to remember that building a strong credit history is actually a long-term process. Consistent, responsible financial habits and maintaining positive credit history over time is the key to achieving and maintaining high FICO scores. If you found value in this video, please hit the like button, subscribe to my channel, and make sure you comment of maybe one tip that you'll take to help improving your FICO. Thanks for watching.